Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar reversed its 9-day bearish streak on Thursday after hitting its lowest levels since early May and finding support also at 65.30. From the rejection, now anticipates further upside gains and looks towards 65.95 and 66.45 and therefore should ease the market out of its recent extreme oversold condition, and keeping an eye on this ADX as it is overheating to the bullish bias. In the event the market fails to sustain, then the next support beneath 65.30 seen at 64.75 and reassess from there. An interesting bounce when it comes to the euro as it appears to find the base around 108.35. From the current pattern though, I feel there could be further upside potential looking on towards 108.70 and maybe even towards that broader call, that is, of 109.10.35 to 110.05.15. Meanwhile, the dollar index, which measures the greenback strength against a basket of 6 major currencies, closed flat in New York at 104.30. Thursday's economic data, that is, the second quarter GDP report, showed that the US economy grew by 2.8%, surpassing the forecast of 2.1%. This gave a preview of Friday's inflation report, which revealed that the core PCE price index increased at 2.9% annualized rate for April, May and June, and exceeding the forecast of 2.7%. Friday's report should provide the US Federal Reserve with crucial evidence for a potential interest rate cut in September. However, some anticipate a rate cut as early as next week, when the US Federal Open Market Committee, the FOMC, begins its two-day policy meeting. Moving on to dollar yen, the market sharply rebounded on Thursday and now posts a Japanese candlestick hammer. To support this bullish candle, the market needs confirmation, and that is a break of 154.55, which could reinstate the upside to 155.5 or even back to 157. Therefore, traders should exercise caution, monitoring technical signals closely and adjust their risk management accordingly, given the high volatility. Failing to get the confirmation, well, the market may find that bearishness may strengthen and therefore look back to its present target, given from the break of 154.70, and that is down towards a 150.5. The British pound's decline gradually eases as the bears encountered support, while the dollar index ended flat at 104.30. Next week's attention will be on the Bank of England, which is expected to announce a 25 basis point rate cut from 5.25 to 5.5. Along with that, we do have the Fed's July rate decision, which also could be a surprise. So do keep an eye on the markets, as we may see this current pattern weaken to 128.10.15 and maybe even down to 127.45. But closely monitor the markets in case we do see a surprise bounce, and that is a break of 129.15 leading on to 130. I still hold the broader call though to the weekly time frame, that is at 131 to 131.5. Wrapping up with commodities, well, as we got closer towards our key broad trend line, which was seen around 2,342 to 46, we're finding a little bit of momentum and demand coming back into the market. We do need to see further coverage though, and a break of 2,384 may lead us on towards 2,400 or even higher. Given the fact that this is a very strong trend, then the bulls may continue to guard this level and demand may continue and eventually overthrow this bearish challenge and look on, as I say, to the upside. An engulfing candle surfaces for oil, as we can see from the rejection to the bottom side, and given the fact from the bullish divergence kicking in rather aggressively, could now see a move on towards 79.10.15 or even up towards $80 a barrel. However, if momentum wanes, then the support focus will be back on at $75 a barrel or even lower around this base here that is seen around 73.70.85. Well, that's a wrap. Thank you for joining me. And as always, look out for the interest rate report. I hope you enjoy the great start to the new weekend.